I've got to ask, where's the incentive for entrepreneurship?
It's just so difficult. There's so many barriers for entrepreneurship at the moment. Business rates are through the roof, like everything is so expensive. I read a statistic that apparently if you earn, I think it's £72,000 a year, you could get that from not doing anything but being on benefits.
Really?
Yeah. Where is the drive
Yeah.
for people to be making and building something for themselves? That's why so many people are moving abroad. You know, the top 1% of wealth in the country pay 30% of the total income tax bill. Yeah. If people know this, surely the government think, how are we going to do this?
How are we going to sustain society
Yeah.
if all our cash flow is walking out the back door?
Yeah,
That's pretty scary.
it is. It's terrifying.
Today's episode is a really interesting one because this conversation ended up going in a completely different direction than I had planned. But I think a direction a lot of people are quietly thinking about right now, namely tax, the UK, and what the future actually looks like for entrepreneurs and families. We talk a lot about tax in the headlines, but not enough about what it really means for business owners, high earners, and families trying to plan ahead, especially with the changes that came about from the 2025 budget. I'm joined today by Charlotte, a tax expert who works closely with entrepreneurs and families on the big picture tax planning, including what happens when people leave the UK to move abroad or start looking at countries with better tax benefits. We talk about why more business owners are considering relocating, those that have already left, and how the 2025 budget has changed the tax landscape, including some major shifts around farms, pensions, and inheritance tax that people really do need to understand. This episode is less about loopholes and more about planning, what people should be thinking about now before decisions are forced on them later. So if you're a business owner, an entrepreneur, or someone thinking long-term about wealth, family, and legacy, then you're not going to want to miss this episode. So first of all, Charlotte, thank you so much for joining me.
Thank you for having me.
I know that this is a massive topic, something that even I am personally interested in, because tax, as we were saying off camera, it impacts everybody.
Yeah, it really does.
I'm going to get straight into divorce because obviously that's what a lot of my viewers will be interested in. What do you think is the biggest tax mistake that people make when they're separating or getting a divorce?
Okay, so when it comes to taxes, the main rule is it's all about ownership. Okay, it's who owns the assets.
Yeah.
Other than your house.
Okay.
So when you're talking about your house and private residence relief, which is the relief you get from selling your house. Obviously, if you sell your house, that's your most valuable asset. You'll have a big gain on it.
Yeah.
So you want to kind of make sure you've got the reliefs in place.
Yeah.
Now, when it comes to the house, it's based on occupation, not ownership. So if there are two partners living in a house,
Yes.
you have to, you both get obviously the private residence relief.
Yes.
If you move out of that house,
Yes.
you are forfeiting that private residence relief for the period that you are outside of the house. You've got a 9-month period,
Yeah.
but when that house is sold, the gain that you get, you will not be covered by private residence relief. If you don't do a transfer of no gain, no loss,
Yes. Yeah.
you do not benefit. So people always think it's fine, my name's on the deeds.
Yeah.
But actually, the second you leave that house, your PRR, private residence relief, starts to erode. And it's something that you really need to keep an eye on.
So what should they be doing then? Because let's say the relationship's really toxic and one of them just has to go.
Yeah.
How do they protect that relief? Or what should they be doing?
I think that the best thing to do is to do a no gain, no loss transfer.
Okay.
Because that
and
means...
what does that mean?
So that means that you are literally transferring the asset to your spouse.
Yes.
You are not incurring a gain on your share of the house.
I see.
So it's gone no gain, it's transferred no gain, no loss, and it's a much smoother way of doing it. But then obviously you're giving up your house.
Yeah.
So obviously there's so many more things about that, but
Yes.
that is what I personally would recommend to do, or just keep keep an eye on the PRR. If you
Yes.
can live in the house together,
Yeah.
that's what you should do.
Or ultimately, if you don't want to transfer your share, but you have to move out because it's a toxic relationship, know that each month that goes is potentially impacting you financially, and therefore look to get the resolve as quick as you possibly can.
Absolutely. You do have a 9-month kind of grace period. But absolutely.
Yeah, do it fast. At what point does HMRC stop seeing you as a couple and treating you separately?
The day you separate.
Really?
So the day you separate, you're seen as differently. You're seen as kind of the relationship's broken down. However, HMRC only cares about the law. Okay? So if you have informal arrangements between you, they don't care about it. They want formal kind of clarification. So they do see you as separate. So in terms of child benefit, for example, only one parent can apply for child benefit, but the day that you separate, your child benefit might change. So for example, if as a couple, one partner was earning more than £60,000 and so it was getting, dwindled lower and lower, if you are now applying as a single parent from the day you separate, if you earn under £60,000, you'll be entitled now to more child benefit.
Oh, wow.
So it's important to understand all the nuances. And that's why I always really stress that getting tax advice when you separate is a cost that is crucial.
Yeah.
Yeah.
It's super interesting because as a family lawyer, we cannot obviously give tax advice because we're not qualified in that. And we're not even thinking about the tax implications, save for maybe CGT, capital gains tax, if we've got investment properties and we're transferring, those between the parties. But you're right, it's absolutely crucial that they do have some tax advice running parallel to the legal advice.
Absolutely.
Next question, can a divorce settlement look fair on paper but be completely unfair once the tax is applied?
Absolutely. I mean, take, for example, the house.
Yeah.
So if a partner moves out of the house, but you both have a 50-50 share of the house, the spouse that was living in the house gets to benefit from the private residence relief. So they will not be paying a penny in tax on the gain of the sale of their house. Whereas the partner that's moved out of the house will have to pay a gain because they've moved out. They've lost their private residence relief. So they will be paying additional tax. So even though it looks like they own the house 50-50 together, this person will be paying a lot more tax than the other person. And that's just one example.
And if the person that moves out eventually transfers their 50% to the person that stays in the property, does the person in the property have to pay any additional tax because they've just accumulated an additional 50% of equity? Do you know what I mean?
So yes, they would. So the base cost, so the fact that it's a transfer, no gain, no loss, means that the base cost, so the amount that they paid for the house in the first place, remains the same. Okay. So let's say for argument's sake, £300,000. Okay. Now the person that lives in the house, I mean, I guess they won't be paying additional. They actually won't be paying an additional gain on it.
Okay.
But let's say they had an investment property. Okay? Let's say it's not their primary residence. If it's an investment property and they have, and it's £300,000, they transfer. So this person now has a property worth £900,000.
Yes.
They will have to pay the tax on that gain. Okay.
So the 600,000.
The 600,000.
Okay.
Yeah. But of course, they'll be paying more tax, but they will also be selling their house and receiving all the proceeds themselves. So as long as they're careful with their money, and for example, the money that was passed over to them to buy the 50% share of the property, as long as they're using that money well, investing it, not just spending it, almost saving it for when they will be having to pay this tax bill, they will be fine. But they will incur a much bigger gain because they now own the entire property.
More equity, which makes sense.
Yeah.
So in family law, we call the primary residence the former matrimonial home. So just for clarity, if the former matrimonial home is owned by husband and wife and the divorce settlement says that husband is going to sign his 50% over to wife, in return, he gets to keep all of his pension. Wife is not paying any tax on that.
Yeah.
Okay. But if the parties own a rental property in both names,
Yeah.
and husband is also ordered to sign his 50% over to wife, she will pay tax on that.
Yeah.
Does she pay it at the time the transfer is complete, or at the time that she may decide to sell the property?
At the time she decides to sell the property.
Oh,
because
okay.
when the transfer happens, it's done not at market value. It's almost done, they essentially say it's done at base cost. So it's the no gain, no loss.
Got you.
And you do have a 3-year period from the end of the tax year of the separation to do a transfer of no gain, no loss, unless there is a formal financial order, which I know you always talk about, through the court, and then that time frame is unlimited.
Got you.
So it will only be upon the sale of the property to someone external that they will have to pay capital gains tax.
Okay.
Nothing to do with the transfer from
husband to wife or vice versa.
Yes.
Okay. And in that instance, running with my scenario, when she sells that property, is that what we call the capital gains tax?
Yes.
That's the element that they have to pay.
Yeah.
Okay. And it's on the difference between what they bought the property for and what they're selling it for.
Absolutely.
So that bit, not on the whole amount.
No.
Okay.
No,
Fabulous.
No.
Just on the increase that's happened while it's been in their ownership.
Yeah, absolutely.
Got you. Okay. If, and this happens all the time, people will delay a financial settlement just because emotions are running high.
Yeah.
Can you think, and you talked about the private persons relief or private property relief, is there any other tax disadvantages in delaying your financial settlement following the divorce? Is there anything else that people should know about if their financial settlement is being delayed?
So if we go back to the house example, so an investment property, the market value of the property could increase significantly.
Of course.
Between the time of starting the process and completing it. So if you delay the process, the value of the house will keep increasing, which is fine because you'll essentially be getting more money, more proceeds from the sale. But that also means you will have a bigger gain. So it's kind of swings and roundabouts because you'll be getting bigger proceeds, but it's, again, how you deal with that money, how you use the money, making sure you keep the amount of money that you think you'll be paying aside, making sure you've got it so you're not stuck.
A lot of my clients, particularly where we've got children involved, they are really keen to keep the house for the sake of the children.
Yeah.
What should they be mindful of from a tax perspective, just by keeping the property?
So do you mean keeping the property together or doing a transfer?
Doing a transfer.
Fine.
Because their main intention is, I really can't afford to buy another house trace to accommodate me and the children. The children are living with me, so I'm going to stay in the former matrimonial home.
Okay.
What should they also be thinking about from a tax perspective, aside from the family law issue of just getting the property?
They should be thinking about their future. So they should be thinking about future partners.
Yeah.
Future partners in terms of properties.
Yeah.
Because if they move out of that, if they move out of their former matrimonial home, they will be eating into the private residence relief, actually eroding away the private residence relief.
Yeah.
They can come back and then get it back. There's a 3-year period where, I don't know exactly what they call it, but it's like a 3-year absence where you can leave and come back as long as you live there, continue living there. But it could just become very expensive. It also, in terms of the transfer to your children, unless you're doing it, within the 7 years of death, and all that kind of thing, you can incur big inheritance tax bills.
Okay.
Yeah. So you just got to be very careful and making sure, again, you get the tax advice to do that.
So it's not always a great idea to keep the home just for the sake of the children.
No. There are so many more things to consider.
Yeah.
In my opinion.
Yeah. Obviously, the buy-to-let properties, we've already covered that the CGT becomes payable if you receive buy-to-let properties as part of the divorce settlement, and then you go on to sell them later on down the track.
Yeah.
That could be a lot of money.
Of course it could
Which actually brings me on to something else. When, as lawyers, we are looking at the assets within the marriage, and maybe we have a matrimonial asset pool of 500,000 and we decide that a 50-50 split is adequate, it's really important then that we don't just say, right, 250 to you and 250 to you. Because if we give 250 to you, but actually you've got loads of CGT to pay on that.
Exactly.
We could end up with an unfair settlement.
Completely.
So it's so important to get the tax advice.
Also, it's worth noting with buy-to-let that actually, I know we talk about homes being occupation, but that is just for the private residence relief. In terms of just income that's taxed, it's based on ownership. So if I don't know whether you ever come across this, but if you ever have a rental property where one spouse benefits from the income, but the other spouse actually owns the property, I don't know whether you ever come across that. So one has ownership, but one receives the income.
Yes.
The person that has the ownership is the person that has to pay the tax on the income. So, yes, so that's something.
Even though they're not receiving it?
Yeah, it's all based, that's based on ownership.
Ownership. Oh, my goodness.
Yeah, so there's lots of little nuances that you need advice with.
I actually had a case where they weren't married. I was acting for girlfriend, if you like. Boyfriend owned a property and he was receiving, I can't remember, £400 a month, clear profit from this property. What he was saying to his girlfriend, who he was living with, is, I won't give you any rent, but you can collect the rent from my rental property and keep that as my cost towards your house. In other words, rather than him picking up his rent from his property and then giving my client, you know, his costs or, you know, cost of living for the month, he was sort of missing out himself as the middleman. So in your example there, he would have been having to declare that as an income even though he wasn't receiving it.
Yeah.
She was picking it up for him.
Yeah.
Goodness me.
Yeah.
Now, that scenario went on for about 8 years.
Oh, my gosh. Yeah.
So he would have ended up paying an awful lot of tax had he declared it, I suppose.
Exactly.
That's the thing. If people aren't declaring it, how at risk are you? Because they're declaring it because they genuinely don't know. You know, if they're filling out their tax return and he's thinking, well, I didn't receive the money, so I'm not going to declare it as an income.
Yeah.
How at risk are you? What are the powers that HMRC have there to swoop in and go, okay, you should have been declaring that? Can you plead ignorance is what I'm getting at?
I don't think you can plead ignorance because I think a lot of, listen, there are cases where, of course, it's a genuine mistake and they don't realise. But I think there's a lot of people who just try and take advantage of the system and just try and benefit. I think HMRC definitely look at, I guess would look at your lifestyle. So they might look at the girlfriend's lifestyle and think, hang on a second, how are you affording this? You don't declare any income, so how are you afford? So they could look, that's how they got their sneaky ways, and actually they're now implementing new kind of AI tools to catch people with those sorts of scenarios. So
Goodness me.
Obviously there are people that just don't know these rules. I mean, so many people don't know these tax rules.
Absolutely.
But it's on you. HMRC says it's on you. It's your responsibility. To get it right.
Something that is constantly being argued about, child maintenance.
Yeah.
Charlotte, is it taxable or is it not taxable?
It's not taxable.
It's not taxable.
It's not taxable. It's not deemed as income. It's not taxable for the person that receives it. It's not a tax deductible expense for the person that gives it.
Oh,
So, for example, let's say, for argument's sake, easy figures, if you earn £100,000 and you pay £30,000 in child maintenance, you're taxed on your £100,000. So the person that gives it is taxed originally on the £100,000. The £30,000 child maintenance is given after tax has been taken.
Got you.
So yeah, because it's not income. I mean, it's to help with the children. It's not working income.
Yes.
It's a bit different.
That makes sense.
It's the same for spousal.
I was just going to say, so what about spousal maintenance?
It's the same.
That's not taxed for the person who receives it.
No.
And it's already been taxed by the person who gives it.
Exactly. I think that's why they don't tax it again.
Yeah.
I mean, it makes sense.
So then maintenance can't reduce your tax bill. The person giving it then can't offset it against their income.
No.
Oh, God.
I know.
Especially if that's been ordered by the court.
Yeah.
you know, there's a lot of orders being made where they're paying spousal maintenance of £500 a month, they're paying child maintenance of £1,000 a month. That's £1,500 a month that you have to pay. It's not up for debate. And you can't then claim that back against
Is that
your
a
tax
set
return.
amount? Is that...
No.
Oh,
That was just an example.
Fine.
What I meant by that was that you've got some individuals paying a lot in maintenance and there's no choice about it. You know, that's what the court have ordered them to do. We've got it written down in an order. It seems really unfair that they've got to take that out of what's essentially their disposable income.
Yeah.
That they can't claim it as a court-ordered expense.
Yeah.
Is there such a thing as a court-ordered expense? Is there any kind of court-ordered expenses that you can claim back?
Not as far as I know.
No.
In terms of like divorce and that kind of thing, no, not as far as I know.
Okay, that's a shame.
But there are things like the no gain, no loss transfer. So
Oh,
there are ways that you can essentially save on tax. Like you're not having to pay additional tax with those sorts of transfers.
Yeah. Can informal maintenance arrangements cause tax problems later on?
Yes.
How?
Because HMRC don't care about them. HMRC don't care about an informal arrangement.
Okay.
They care what's been ordered by the court. So if you enter into an informal arrangement with your spouse or ex-spouse, and you know, again, you spend your money based on the informal arrangement, but actually HMRC come back and say, actually, we don't really care about this. We need a court-ordered financial order, and that's what we take into account.
Oh, okay.
Yeah.
So for those people out there that have, and I'm glad that they have in many ways not involved solicitors and not gone to court, the message to them is you've got to put this into a formal order.
Yes.
Because
I know you all talk about it all the time, but I
do.
just feel like informal arrangements, especially when you're getting divorced, they're not strong enough.
Yeah.
I feel like you know, something could happen and then you get in an argument and actually, you know, I said that, but actually I don't mean it. I don't want to do that anymore.
Yeah.
You know.
There's always one party that will be left vulnerable.
Yes.
And I tell you when they always break down, when new partners come into the fray.
Yes.
When the new girlfriend or the new boyfriend hits, and it's like, well, why are you paying your ex all that money?
Yeah.
You know, we got to build a life together now.
Yeah.
You know, just don't pay that anymore. What's going on?
I know.
And then it kind of really disrupts the apple cart then.
Yeah.
Okay. I have a lot of business owners as clients.
Yeah.
So I myself am a business owner.
Yeah.
So this is quite close to my heart. What tax issues come up when one person owns a business during divorce?
Okay. So this is a big thing that comes up because of business asset disposal relief. So this is when you have a business and it's the tax relief that you can benefit from upon the sale of your shares.
Okay.
So there's some criteria that you need to meet. So normally if you sell shares and if you're a higher rate earner, you will be paying 24% capital gains tax on those shares. Now, for the amount that qualifies for business asset disposal relief, you can bring that down to 14%, but it's actually going up to 18% from April 2026. But you can still save. I mean, that's a good chunk. You can still save a lot of money, but you have to meet certain criteria, okay? So the criteria is you have to own at least 5% of shares. You must be an employee or director of the company.
Yeah.
And these two conditions must be met for at least 2 years before the sale.
Okay.
Now, if you start transferring shares from one spouse to another, you might no longer meet that criteria. You might not own 5% of the shares anymore. Or you might not, I mean, you probably still would be a director or an employee if you were before, but it's more the 5% shares or voting rights. You might not have them anymore. And you have to satisfy both of those criteria, which means you could lose that relief.
Wow.
So it could be a very expensive divorce, part of your divorce.
Yeah. And what I find is that, and again, not to be stereotyping, but generally I found over the years I've been in practice that the men sort of want to keep their businesses and the women want to keep the houses because they have the children. For tax relief purposes, the woman has some shares in the business.
Yeah.
Husband might own 51%, wife owns 49%. And as part of the divorce settlement, we are saying to wife, you hand back your 49% of the company and in return you get to keep the house. So effectively, does wife then have to pay this 18 or 14, 18%, depending on when she does it, on the 49% shares that she's selling back to the husband?
This could be the transfer of the no gain, no loss.
So because we're not selling particularly, we're just transferring ownership.
It will be transferred at base cost is for houses, but it will be transferred at the cost of the shares. I guess if you're starting a business, it would be transferred there would be no cost anyway.
Yeah.
So it would just mean that when the partner who now has all of the shares would sell the business, they would have a massive gain.
Yes.
Right?
Yes.
So that's how it would work.
Yeah. And would the tax be payable on the gain that person had?
Yes.
Not all of the shares. So if
What do you mean?
So husband now has 100% of the shares.
Yes.
He's now accumulated an extra 49%.
Yeah.
To what he had before the divorce.
Yeah.
5 years down the track, he now wants to sell the company. So he is selling 100% of his shares. Is he paying 14/18% on all of the shares or just the gain that he had from the divorce?
The gain. So the 14% is for the gain. Okay. It's all based on the gain, but actually there's a limit of £1 million, a lifetime limit of £1 million. So anything over that would be taxed at 24% capital gains tax.
Really?
Yeah. Yeah. It used to be a much bigger limit, but yeah, they brought it down along with all of the other changes that they've been making recently. But yeah.
I've got to ask, and something I'm sure you're asked all the time, where's the incentive for entrepreneurship?
Oh, I had a conversation about this the other day.
Let's just talk about that for a second.
I know. It's just so difficult. It's so
hard.
It's kind of like there's so many different things about it because there's so many barriers for entrepreneurship at the moment. All the costs, it's so expensive. Just everything, like business rates are through the roof. Like everything is so expensive. And then you've got the welfare where people are, and I totally understand that people who are entitled to benefits should absolutely 100% get benefits. But the fact that they've lifted the 2 children benefit cap, so now it was 2 children, now it means no matter how many children you have, you're entitled to additional benefits, essentially.
See. Yeah.
I read a statistic that apparently if you earned, I think it's £72,000 a year, you could get that from not doing anything but being on benefits.
Really?
Yeah, I think those are the figures. But yeah, so it's kind of like, where is the drive for people to be making and building something for themselves? They take away these the business asset disposal relief. Sorry, that's my mind for a second. You know, the rates are slowly going up. It's kind of getting more in line with capital gains tax.
Yeah.
And there's just no drive anymore. That's why so many people are moving abroad. So they're all flocking. You see, like, you know, every day I see on LinkedIn that people are, that's like the Revolut guy, like they're all moving abroad to save money because, I mean, why wouldn't they?
Exactly right. It's hard. I mean, as a small business owner myself, I do feel that HMRC are my partner because so much, you know, there's not just your corporation tax, there's all kinds of tax that, you know, the accountant's always saying to me, oh, and now you've got to pay this and now you've got to pay this. And as you say, there's the business rates and it's just endless. You just think, wow, for every pound that's earned, I do feel as if so much of it ends up going back to the taxman. And
I think it would be okay if you could see where that money's going.
Yes. Yeah, I think you're absolutely right. But yeah, I do worry sometimes that we're not incentivising people to get up, encouraging them to stand on their own 2 feet and build something for themselves.
100%.
Because the benefits are fairly high. And also those of us that are trying to create something are, I would say, penalised in many ways because the tax threshold is just so high. It really is so high.
I know.
Okay, so dividends, salaries and company benefits, do they complicate divorce, would you say?
In terms of the different tax implications?
Just from tax implications.
With tax, so we always say divorce is based on division.
Yes.
Tax is done at disposal. Okay. So you might be thinking, okay, well, my dividends and the salaries and everything, it's kind of like divided equally, like what we've talked about before, divided equally, but the tax implications go up and down on disposal. Also, it kind of goes back to the original thought of tax is based on ownership. Right. So you've got to make sure in terms of like your dividends and everything that you know who actually owns it. Because I also feel like, I've seen some of your videos that some women, when they get a divorce, or some men, but normally it's some women, are not actually aware of the finances.
They're not.
So they don't actually know what they're entitled to.
Yeah.
So, and it's so important too, because that determines the tax tax implications.
And it was by watching your videos. I mean, I obviously have a very basic understanding of tax implications, but by watching your videos made it super important to me to let people know when I'm having a consultation with them, or when the team's having the first consultation, you really need to go and understand the tax implications. We can tell you what you're legally entitled to. Of all the assets that we have here on the table, we can tell you, well, this is what the court would consider a fair and reasonable settlement. What we can't tell you is what tax implications lie in wait for you down the track. So it's almost divorce and tax kind of go hand in hand.
Yeah, they do.
Particularly where you've got large matrimonial wealth. You know, really large. The tax implications can be fairly high. So it's ownership. Okay.
It is ownership.
Good.
Other than your house. Your main house, it's ownership.
Okay. Do people trying to hide income usually end up creating bigger tax problems?
I wouldn't say bigger tax problems. I just feel like they will get caught.
Okay.
So, I mean, I don't know whether you deal with this, where people hide different assets.
My clients don't tell me, or my opponents don't tell me, but they will say, we have nothing. We're absolutely broke, but have no problem paying their legal bill. And I just think, how's that happening?
Well, that's what HMRC do. That is literally what HMRC do. So they will look and say exactly what you've just said, but hang on a sec. I thought you have no money, but you're driving this car. I thought you had no money, but you're posting on social. They even look on social media now. You post on social media that you've gone on this holiday, that holiday. Yeah.
My goodness.
They've got their AI spotters everywhere. Because it's true, people do flaunt their lifestyle online. So that is actually the quickest way for HMRC to see if anything's been hidden.
Let's talk, just while we're on this subject then, of the consequences. What are some of the consequences if you have been deliberately not paying your tax and engaging an accountant to do it all properly? Actually, before you answer that question, Charlotte, if you've engaged an accountant properly to do your business affairs and it's your accountant that's messed up, who is to blame there, you or your accountant, first of all?
I would say if it's... So in what kind of scenario would the accountant have messed up? Because you have to... I would always get any of my clients to sign a declaration to say that everything that I've been given is the correct information.
Okay.
So if I've then made a mistake based on the information I've been given, that lies with the client.
It lies with you. Oh, it lies with the client.
Sorry. If it's a mistake that I've made, like an accounting mistake, of course that lies with me. But if there's something missing, that lies with the client.
So if your client hasn't told you about all of their income and only given you part of their income, obviously it lies with the client.
Yes.
Okay. That makes
But I mean,
sense.
obviously, that's why accountants also have liability insurance and all that kind of stuff because
to protect them,
to protect themselves. But of course, if an accountant makes a mistake, they will pay for that mistake. You know, if there's a penalty or something, like of course they would. But that's not normally what happens. What could happen is that actually information's been withheld.
Yes.
That's what I would always worry about.
By the client.
Yeah.
So then, going back to my previous question, what are some of the consequences that HMRC can impose on somebody that has been deliberately not declaring an income?
You can go to jail.
Really?
Yeah. You can go to jail.
On what ground? The criminal ground of what, fraud?
That's tax evasion.
Tax evasion, of course. Yes.
Yeah, tax evasion. If you're not declaring your income, that's absolutely tax evasion. You can go to
me.
Yeah,
I should know that being a lawyer, but I genuinely.
But I feel like that should be the way that it should be.
Yeah.
You know, at the end of the day, you know, we pay our taxes. A lot of people do everything the right way.
Yeah.
And if you're not avoiding tax, if you're evading tax, there's a difference between tax avoidance, tax evasion. If you're evading tax, you absolutely should be penalised for it.
That's an interesting point. Tell me the differences between evading and avoiding.
Tax avoidance is using loopholes.
Oh, okay.
Right, so you're avoiding tax.
Offshore accounts, perhaps.
Yes. But if you're doing something legally.
Okay.
Tax evasion is when you're doing something illegal.
I see.
So withholding income,
Yes.
withholding assets, falsifying documents.
Yeah.
That's tax evasion.
And do HMRC, when they find somebody who's been evading paying tax, do they look at the amount? Does that reflect in the consequence? So if somebody should have paid an extra 5,000 as opposed to an extra 100,000 to the taxman,
Yes.
does that have any difference in the consequence that's applied?
Yes, I don't want to say the exact because
Sure.
I don't know the exact, but
Yeah.
yes. I mean, at the end of the day, if somebody makes a mistake of a
Yes.
couple of £1,000s on their tax return,
Yeah.
you're not going to go to prison.
Yeah.
If it's hundreds of thousands, then yes, maybe.
100%.
But you will get fined if you make a mistake
Yeah.
on your tax return. If your tax return is late by
Yes.
a day,
Yeah.
you'll get an immediate £100 fine.
Yeah.
And then it kind of increases as the time goes on.
I have always found with clients that I've had where they have a tax debt to pay, particularly small business owners, that they haven't planned or put money away for their tax.
Yeah.
But their feedback to me has always been that actually HMRC are really okay to deal with in that they will set up payment plans.
Yes, they do.
And as long as you can show them what you've got coming in and what you've got coming out,
Yeah.
there is no, well, you should have known better kind
Yeah.
of approach. It will
Yeah.
be like, okay, unfortunately, you're going to have to pay some interest on that, but let's get you set up on a payment plan.
Absolutely.
Would you agree with that?
100%. So they're called time to pay plans.
Yeah.
And, recently, especially during COVID, there were actually quite a few suicides from people panicking about tax. I know, it's horrendous. And HMRC have made it very clear. Yes, they might be hard to get hold of at some points.
Yes.
But they want you... As in, they don't want you to panic. As in, they don't want you to be stressed. Like, what is the... There's just no point.
Yeah.
They are very happy to set up a payment plan with you. They just... ideally, I wouldn't do that in January. I would try and do it a bit earlier. But they will happily do that with you and make it work for you and your circumstances and your income and your expenses and everything. So it's really important to know that. They are on your side, even though so many people think they're not.
Yeah.
They are. They don't want this to be a struggle for you.
Yeah. And I think it's really important that we touch on both sides, because whilst I really want to stress to people that paying your tax, getting a tax return, knowing the tax implications of assets that you acquire through divorce is super important. I also don't want this video to be scaring people who are out there thinking, oh my goodness me, I haven't even done my tax return yet. That's really important. Okay, so what mistakes do business owners make because they don't get tax advice early enough? And again, in the context of divorce.
Yeah.
What would you say?
I think this business asset disposal relief is the biggest mistake that people can make, because they can think that they're splitting the business fairly.
Yes.
But as I said, if they just don't satisfy one of those criteria, they will have a very big tax bill.
Yeah.
And to be honest, they both will, because they both won't be,
yes.
they both won't satisfy the criteria.
Yeah.
So I think that's really important. I just think that, as I've said before, the cost of getting tax advice is much smaller than the tax implications that can arise from not having advice.
And I think watching so many of your videos, that is your running theme. There are so many people that just don't know of relief that's available, particularly for businesses.
Yeah.
You're just not aware of what you can claim.
Yeah, people get very stressed about taxes.
Yeah.
They panic. They think, I can't understand anything. I wasn't good at maths in school, so I don't know about this. When actually it's really simple, straightforward information. HMRC and the government make it incredibly complicated. There are so many different taxes. But actually, when you get to the crux of it, it's really simple. Your income tax, your corporation tax, the different reliefs, your personal allowance, which is £12,570 before you pay any tax. Really important to know that. I actually get a lot of questions where people don't understand, and this is not their fault at all, but they don't understand. They'll say to me, well, I don't want to earn in the higher rate band of tax, because then all of my all of my income will be taxed at 40%.
Yeah.
When no, we work on a progressive system.
Yeah.
So it's 20%, then 40%, then 45%. But so many people are just terrified of it. So they turn a blind eye, think, doesn't bother me now, I'll deal with it later.
Yeah.
And actually they just need to take charge now, which is why that's what I'm trying to do with my videos, make them simple, short, and just easy to understand.
Yeah.
But then when you get into the whole topic of schools and trying to get finance education in schools, which I think is an absolute must. But I mean, it goes further than financial education. I think mortgages should be talked about in schools.
Yeah.
You come out of school and you know all about the Pythagoras theorem.
Yeah.
And if you don't, I mean, I was good at maths. That was my thing.
Yeah.
Obviously, I'm an accountant, so that was my thing. But for people that found that tricky, which is the majority of people, that does not mean you're bad at maths or bad with money and your finances. If the school system just focus on what's actually important. I'm an accountant and I've never used Pythagoras theorem.
Yeah.
And I'm the person that probably would out of most people.
Yeah.
So they just need to make it simple. When you come out of university and you think, okay, I'm now going to buy a house.
Yeah.
But actually, first of all, no one can afford houses at the moment, but you don't even really understand how mortgages work, how to get them, just how the whole system works. I just feel like it needs to become more worldly and kind of take it out of the kind of like historic times where apparently they're still, the school system is still trying to get you to kind of sit down, follow orders so that you can transfer those skills into a factory setting.
Really?
Yeah, because that's what they used to do. You used to learn those kind of skills at school so that you would sit in a factory and do what you were told to do.
Goodness
me. Whereas obviously times have changed.
Yeah, times have really changed.
So
That's
we need
so
to adapt.
interesting.
Yeah, because if you think about it, it's true.
Absolutely.
Yeah.
I was just going to, as you're talking there, the amount of clients that I will get, and again, sorry to stereotype, but it'll be more of the female clients, and I'll say, okay, let's start by establishing what's your annual income. They don't know. They'll tell me how much they get in their pay packet each month, but they don't actually know what their annual income is. Or I will say, do you know what the equity in the property is? What's equity?
Yeah.
Okay, what's it valued at? Oh, I wouldn't have a clue. And sometimes I'll actually do, go on Rightmove while I'm in the consultation, and I'll put in the address and I'll be like, okay, 3 bedrooms, similar. So we can establish a rough idea. Because I'm trying to give them advice as to how much of the equity they can keep.
Yeah.
So what's outstanding on the mortgage? Oh, I don't know.
Yeah.
And I just think, wow, why it worries me is that these then, in my mind, are very vulnerable individuals because actually, if you don't know and you can't give me the information, I'm going to struggle to protect you. And if your ex is doing something a little bit sinister, increasing the mortgage, selling off assets that you don't know about, I'm not going to be able to put a freezing order on those either to afford you the protection.
Yeah.
So I agree with you. I think that there has to be more life lessons in schools. Let's be completely honest, and just have an understanding of the terminology.
Yeah.
Chances are, a lot of the kids in school are going to have a mortgage one day.
Of course.
Let's understand how that works.
Yeah. And also,
let's understand what salary means, and all these not buzzwords, but you know what I mean. Just the language of finances.
Yeah. And also, it gives them the control.
Yes.
So people will just be in control of everything that involves them.
Yeah.
And how they can. And how they can maneuver their money. And that's another thing, talking about how to investing your money, not just spending it. You get a salary increase, but that doesn't mean that your lifestyle increases by that amount. No, you keep your lifestyle the same. You invest that bit extra. Otherwise, you're going to be left with nothing, you know?
Yeah. It's so true, I think. A lot of people will increase their lifestyle as their income increases.
Yeah.
They just see it as having more to spend and more to spend.
Yeah.
And eventually you are going to reach the end of the train track where you have to stop working and then what?
Yeah. But also think about your children. If you have children, you should be putting, if you have additional money, if you get a salary increase, you should put a bit of that money away into a junior ISA for them.
Yeah.
Let that money grow tax-free.
Yeah.
Give them a head start. I mean, the cost of living is just increasing like year on year, and at least try and set them up a bit. That's what I want to do. I want to just make them prepared. Also, talking about it at home.
Really?
Yeah, talk as in, mine are too young to be talking about it at home. But talk about it. Talk about money with your partner. Like, talk about Because that also, I'm sure, could be one of the reasons why people get divorced.
Absolutely.
You know, people don't want to talk about money. It's stressful, but actually having an open conversation about it from the start
Yes.
just gets everything calmer. You don't have to panic. We're in it together.
Yep.
That kind of vibe.
You're right that the stress, I think, comes about for a lot of marriage breakdowns where the children come along, because that's the point where we potentially go from 2-income family to 1-income family.
Yeah.
There's pressure on whoever is still working to find the difference, because now we've dropped to 1 income. But there's also pressure on the person who's at home, because their whole world has now been turned upside down, and they lose that kind of independence.
Yeah.
The one thing I would say, though, it can be difficult for women. You know, I'm very pro women remaining a little bit independent, keeping that financial independence as much as you possibly can. But I get that it's difficult whilst you're having children.
It is.
Because maternally, you want to stay at home and look after them.
Of course, but I also think that in today's day and age, there's a lot more flexibility.
Okay.
So, you know, I try and be with my kids before school,
Yeah.
which it's pretty easy.
Yeah,
He's working at 7 a.m. And after school, you know, when they finish school at 3, I like to be there with them.
Yeah.
And in the role that I have now, I can my hours can work around it. I feel like
Yes.
there are so many jobs that aren't just solely 5 days in the office every day, especially since COVID. Like,
Yes.
people are so much more flexible.
Yeah.
And I actually think it's really important for people's minds. You know, I have
Yes.
friends who, you know, you have kids and all you're thinking about the kids and the sleep routines and, you know, the potty training and everything. And actually, you need to do something for yourself.
Yeah. It's so true, actually, to engage mentally with other adults.
It's good for
is
your
so
mental health.
important.
It's good to
Yeah.
just keep spirits up and
Yeah.
think about things that, you know, because also when your kids grow up, you might just be left with a real void.
So true, actually. I mean, I'm at the different end of the scale to you. Mine are now all grown. I've only got one left at home. And that happens in the blink of an eye.
Yeah.
And I know that we're going off topic slightly, but I think it is important to talk about that, because it happens so fast that actually you just think, what do I do now?
Yeah.
Oh, my goodness.
Yeah.
Because my routine actually has been disrupted. I'm so used to doing football runs
Yeah.
and packed lunches and all this washing that has been at the weekend, and now it's kind of all gone, and
Yeah.
it's like, goodness me.
But also, I'm sure you then also see divorces happening when the kids leave.
Yes.
Because they've kind of kept it going. They've just had all
Yes.
these distractions, and actually now they're back to kind of pre-kids where it's just the two of you.
Yeah.
And I'm sure that's when a lot of relationships start to crumble.
People are creatures of habit. So I think when your children are growing, somebody will take on responsibility for earning, and somebody takes on the responsibility for nurturing.
Yeah.
And we both have our roles, and we both stay in our lanes. And I think sometimes, not for every family, but for some families, when that routine is disrupted, it's sometimes too late to then almost reconnect and just do something together, because we've got so entrenched in, well, I do that and you do that.
Yeah.
And we're not actually coming together.
Yeah.
Have you seen cases where winning the full matrimonial home actually left somebody worse off?
I wouldn't say worse off, because if somebody wins the matrimonial home and they live in it, they will benefit from private residence relief. So they won't be paying tax.
Yeah.
But they will have to make sure that they can keep the home in terms of the maintenance.
The maintenance, yeah.
And, you know, the mortgage payments and everything. I mean, you would think that they could, if they had been bought out,
Yeah.
you would think they have the proceeds, the money to do that.
Yeah.
But then the only thing you could think about of being worse off is if they were so set on keeping that family home, but actually the other assets would have given them more wealth.
Yeah.
But they're so set on the family home, which
Yeah.
I understand. You know, we
Yeah.
talked about with the kids, you don't want them to be moving out if they don't have to, and you know, you want stability and all of that.
Yeah.
But that would be the worst thing about
Worst case.
keeping. Yeah, worst
Yeah.
case is if kind of you would be benefiting from something else.
What's the worst tax bill that you have seen following a divorce? Or if not following a divorce, just the worst tax bill that you've seen?
The worst tax bill I've seen has probably been when these criterias haven't been met in terms of a sale, because you're talking about a lot of money here.
Okay.
So, you know, when you're selling a business, you're talking about more money than than having rental income or that
Yes.
kind of thing. I would say that when you're, but there's also like dilution of shares and, you know, more investors coming in and your voting rights might get lower and lower. And actually then it's the question of, do I sell now? Do I benefit from this relief? Is it worth me holding on to these shares? Because I'll be earning more anyway, so it doesn't matter. All those sorts of things. Also, following the budget last year with tax rate increases, there was a lot of just nervousness, like amongst my clients, because all of a sudden they're going to be, I know it doesn't happen instantly, but within the year, 6 months, pensions coming into inheritance tax, all these things, people are panicking. So it might not be tax bills that have happened now, but it's ones that will obviously happen in the future. And it's just like there's been a lot of panic.
Talk to me about that, because obviously as a family lawyer, we are constantly dealing with pensions.
Yeah.
But we're always trying to ring fence inheritance. And we can successfully ring fence inheritance from the divorce settlement as long as we've got enough assets within the marriage to be able to satisfy everyone's needs, financial, housing, etc. So talk to me about that, pensions sort of blurring the lines and going into inheritance.
Pensions have always been exempt from inheritance tax. From April 2027... pretty sure it's April 2027, not April 2028, but from April 2027, it's going to be brought in within inheritance tax.
So what does that mean in reality for people?
So that means that your inheritance tax nil rate band is £325,000.
Yes.
So when you die, your estate, so that's your home, everything, all of your assets, if they are less than £325,000, your descendants, whoever gets your estate, will not be paying a penny of inheritance tax.
Okay.
From April 2027, pensions were never included in that. Now, pensions will be included, which means that you've been saving up and saving up all these years, putting money into your pension. And listen, I hope that they've used their pension by the time that they've died. But if they haven't and they're passing it down, that will now come in to that £325,000.
Goodness me.
Which is just, I just feel like that's just such a kicker. Such a kicker. So I really don't agree with that at all, because I feel like it's almost making all this hard work. People are choosing to put their money away every month, kind of from their payslip or in a SIP, which is a self-investment. They, I just think it's so unfair. Why are they? I just don't understand it. I actually don't understand their thought process behind that.
I must admit, I've always had an issue with some of the laws around inheritance tax, just because, for me personally, I think, well, I've earned and I've been taxed. With what's left, I've then purchased a property or whatever it might be, invested it or whatever. If I then die and want to leave that to my children, I think it is a big kick in the teeth that my children then have to pay tax on it again. Do you know what I mean? It's 100%. Already been taxed to provide this. You know, if it was ongoing income from a business that I left them, absolutely, that has to be taxed, because that's a cash flow that keeps coming in. But not from an asset that I've bought and potentially paid for. Let's just take the example, the house with no mortgage by the time I die, and then my kids have to pay tax on that again.
So they'll have to sell it. So they won't even be able to benefit from what you're leaving them.
So they can't move into it.
Well, not if they can't afford the tax bill. If they can't afford the inheritance tax, they're going to have to sell it to pay the inheritance tax. They'll obviously keep the remaining funds. But they have to find the money to pay the inheritance tax.
To pay the inheritance tax, of course, which could potentially mean selling the family home. That is so unfair.
It is so unfair.
And now, as you say, you're bringing in the pensions to it. You could have somebody that maybe only has assets of 200,000 because they've always ploughed into their pension. And now the pension could tip them over the 300 and whatever it is.
And
threshold.
also they could be putting into their pension because they don't want it to be hit by inheritance tax. They could actually be thinking, I actually don't want this pension for myself. I want to give it to my children.
Goodness me.
And then all of a sudden now, that's what's being pulled in.
Do you think those changes in the budget are then making it or giving the tax planners a little bit more of a challenge? Because surely if we're bringing in more restrictions, there has to be more ways to be able to invest tax-free. Do you think that tax planners are
I think that we're trying. We're trying, but there's not... HMRC know there are loopholes. As in, they've kind of made those loopholes, okay? So they want people... They're very happy for people to use the loopholes, but I just feel like they're just kind of closing in on people. And actually, we're seeing we're seeing people leave every single day. And the people that are leaving are the people that are mobile, that can afford to leave. So we're talking about the very wealthy people.
You
okay?
mean leaving the country?
Sorry, yes, leaving the country. And that is leaving the working class, middle class people here to kind of deal with the hit. So the people that are struggling are going to be struggling more and more and more. And the people that can just get up and leave. The top 1% of wealth in the country pay 30% of the total income tax bill.
Really?
Yeah. So if those people start to leave, it's going to be the others.
Trickle down.
Yeah.
Because the government still have to pay for everything, education.
And if I know
NHS.
this, and a lot, if people know this, surely the government think, hang on, how are we going to do this?
How are we going to sustain society if all our cash flow is walking out the back door?
Yeah.
That's pretty scary.
It is. It's terrifying.
Something that I'm always fascinated by, and I don't want to name individuals, but where you see celebrities, people that you know to be wealthy, being declared bankrupt, what's happened there? And I ask that because we've already talked about, the wealthy leaving.
Yeah.
What do you think has happened where the wealthy celebrities are now declaring bankruptcy?
I think a lot of people where that happens live beyond their means for many, many, many years. They'll be taking out, you wouldn't expect it, but they'll be taking out loans. They'll be, using credit cards. They'll be trying to keep up that lifestyle for fear of being called poor or, oh no, this one's fallen from grace.
Yes.
And also a lot of people don't know, even if you're a celebrity, don't know how to invest their money.
Yes.
So they could just spend it all. And they might not have had the best advisors. Maybe some advisors got a percentage of their money and just kind of never really wanted to say no.
Yeah.
So I actually saw, I was watching the Victoria Beckham programme.
Oh, yes.
And this has nothing to do with what's been going on in the news with her recently. But I remember her saying that her business was hemorrhaging money because people were too terrified to say no to her.
Really?
And they should have just said no. They should have said, she said she was flying chairs from like one side of the world to the other just for her office, like things that were so ridiculous that she didn't think were ridiculous, but should have been told that they were ridiculous.
Yeah.
Because she wanted to hear it.
Yeah.
Yeah.
What happens if what drives you into bankruptcy is a huge tax bill? That because you've been overspending and living a lavish lifestyle, that now your tax bill is so out of control that you end up going bankrupt because you can't pay it. What do HMRC do then? Do they write it off? Or will it always sit there?
I don't know. I have a feeling that if you are declared bankrupt, it's written off.
Okay.
But I don't think that, but you would only be declared bankrupt if they were 100% sure you didn't have assets.
Yes.
I don't think you would get away with hiding assets.
Yeah.
And I'm sure that happens quite a lot.
Well, I asked the question because I won't mention the celebrity, but I was watching one of their documentaries and that's what happened. The lavish lifestyle. So the income was so high that it generated a huge tax bill.
Yes.
But nothing was being put away for about 2 to 3 years. And the spending continued. And it got to the stage where court action was taken by HMRC for the income because they were still having this celebrity lifestyle. Yeah. And it turned out on paper they had absolutely nothing and were then declared bankrupt. And I always wanted to know, well, what do HMRC do? Because that's not very fair. And as you say, that then trickles down to the likes of us.
Yeah.
We then have to, make up the deficit somehow.
Yes.
Not just you and me, Charlotte, but everyone that's working.
But the fact is that person isn't benefiting from the money anymore. Like they must be, I don't know where they're living, like they must be in a real dire state to be declared bankrupt.
Yeah, to be renting their house, they've sold what they have, they've spent that, there's no cars anymore.
Exactly.
Yeah.
So I feel like when people are benefiting, like if you're talking about working class people or whoever, making up the difference between what is owed. At the end of the day, that person has no money anymore.
They don't. But I think where I can be a little bit disappointed is that when the good times were happening,
they weren't paying
their tax bill.
But surely that would have been, they should have been paying their tax bill within each year anyway.
Yeah.
So That's very poor tax advisors if they even had any.
Absolutely.
Yeah.
What allowances or tax breaks do single parents often miss?
Child benefit.
Okay.
Because some people are, as a couple, weren't eligible for it.
Yes.
So if they earn over a certain amount, if they earn over £60,000, even if they had applied for child benefit, it would start creeping down until £80,000 when it would all be paid back.
I see.
If you're a single parent, so for example, if you were in a marriage where the husband was the sole provider and earned over £60,000 or £80,000, and the wife wasn't, was a stay-at-home mum, she can now claim the full child benefit amount.
Oh, wow.
And that is from the moment you separate. That's nothing to do with formal papers. That's from the moment you separate, you can start claiming it.
That's interesting.
Yeah.
There'll be a lot of people that don't actually know that.
Yeah.
How does divorce change your tax position overnight? And I'm talking about when you actually get the final order in divorce. So you are legally no longer married.
It won't affect it overnight.
Okay.
Because tax happens on disposal. It doesn't happen the second everything's split.
Yeah.
It's what we say, divorce is division, tax is disposal.
Okay.
So, but it's very important to keep on top of your money and make sure you've got money aside or know when you will have to be paying that tax.
Yeah.
That's really important.
And I think that's what a lot of people miss.
Yeah.
That's what so many people miss, especially people who are maybe, I say this because I'm obviously friends with a lot of content creators and money is coming in from all different avenues for them.
Yeah.
They're doing campaigns and they're having appearance fees and there's so many different sources of money coming in.
Yeah.
And what a lot of people that I've spoken to are missing is that it's your responsibility. You don't have to know how much of that is got to be put away for tax, but at least put something away.
Yeah.
At least be seen to be
I
putting
say put
something
20
away.
to 30% away.
Right, as a guide.
As a guide, just
Yeah.
put it away. You can, if you've got left over and you want to spend it or invest it, you can, but just put it away. Or even just invest it. You can always put it in an ISA, but then take it out. But actually, I don't really recommend that, so don't do that.
Yeah.
But keep 20 to 30%.
Yeah.
Every time you get paid, just put it away, just so it's there. Because also the problem is that people don't think about it because the tax year end stops on the 5th of April.
Yes.
You don't have to pay your tax until the following January. So people kind of just think, oh, you know what? I don't have to think about it for 9 months, so it's fine. But actually, those 9 months are going to come around really quickly, and you don't want to keep chasing your tail, just thinking, oh God, I've got to get that, brand deal or whatever, that income in to cover the bill.
Yeah. And of course, the government has also set up the payments on account now.
Yes.
So is that in a bid to assist people really?
No.
Oh, really?
I don't think so. I don't think it's to assist. I think it's to try and get people. I personally feel that HMRC are trying to get ahead of the game.
Yes.
So payments on account are if you owe over £1,000, you pay the amount that you owe for that year, and then they assume you're earning the same amount next year. So they actually give 50%. You have to pay an extra 50% in the January and a further 50% in July. That will then come off your next tax bill.
Yeah.
But I don't think I do not believe it's to help the taxpayer. I think it's to make sure that HMRC are staying ahead of the tax.
Yeah. Because it is a long time.
Yeah.
You know that the tax year ends in the April and to then not have to pay the tax liability for almost a year, 9 months later, that's a long time. And I have often thought, if I was sat in government and I was waiting for the tax money to come in, goodness me, I'm owed a lot of money. But equally, I've got a lot of things to pay for. So I genuinely thought that the payment on accounts thing was to help people put money away so that it didn't have that big,
you could take it like that
bill.
as well.
Yeah.
But also the rules are changing from April, as in this April.
Oh,
so making
how so?
tax digital is coming into play.
Yes.
So essentially you will have to file online a quarterly report. It's not tax, it's just a report. So the
Yes.
figures that you've made for those 3 months.
Yes.
It's essentially so HMRC can keep tabs on what you are making, and then if you still do an annual tax return. I actually think, even though it is for HMRC's benefit, I think it's really good because I think that people will be aware of what they have.
Yes.
It forces people to kind of know roughly what tax they're going to be paying.
Be accountable.
Yeah.
Yeah.
Which
And
I
that
think
has
is
to
good.
be done every quarter.
Every quarter.
Goodness me. I mean,
Online.
accountants are going to be busy.
I know. I know. But you can use online softwares as well.
Okay.
I mean, it all has to be online. I mean, I obviously talk about PyTax all the time.
Yeah.
But that's it is actually a Making Tax Digital approved software. But yeah, you do annual tax returns on it if you're a sole trader. But I do think it will make people's lives easier, because I think it will actually take the stress away. Even though you'll have to do it every 3 months, you'll kind of get in the rhythm of it. It won't be a stress because it's not like you've got to pay tax then.
Yeah.
And as you said, you'll be held accountable.
Yeah. And this, of course, only applies to business owners, people who are self-employed, not to the employed sector.
No.
Yeah. So the employees will still continue to have their boss pay the tax for them.
Absolutely.
They don't have to do that.
Yeah.
Answer me honestly.
Mm-hmm.
You talk a lot in your videos about people being able to take control of their tax returns and to be doing it themselves, and the benefits that the tax relief that they can benefit from.
Mm-hmm.
How easy is it? Because I know a lot of people are terrified by tax, but honestly, how easy is it for them to do it themselves?
It is really easy.
Is it?
I think that people overcomplicate it.
Okay.
I think that because there are 1,000,001 different taxes, people just panic, don't want to think about it, kind of just put it to the back of their head and just think, I'll deal with it in January. But actually, there are so many things that you can do throughout the year to save on tax. So, for example, ISAs. I talk about ISAs all the time because I just feel like not enough people know about them. I feel like I heard some stat about how it was about 20% of people have an ISA. And an ISA is essentially a tax-free wrapper where you could put money away, you can invest it into stocks and shares ISA, you can put it into a cash ISA, you can even save up for your first home, and the government give you additional money in a lifetime ISA. And it is just a really efficient way to save money. And that's the first relief you have. Pensions. People panic about going into a higher tax bracket. You can reduce that by putting money into a pension. There are just so many things you can do. I know that's not an actual tax return. Those are just reliefs. But in terms of your tax return, it is really simple to do.
Yeah.
There are the automated software like Pi. It actually, you connect it to your bank account and all the transactions flow through. You kind of categorize it the first time, then the second time it knows what categories those all go into.
Yeah.
And then you submit it straight to HMRC. So I do feel like there is a lot of stigma around taxes.
Yeah.
And what I am trying to do in the videos is just try and break it down to a normal level. And it is really, really simple.
Yeah. Do you get a lot of encouragement from the comments that people have used it and gone, actually, Charlotte, that was?
Yeah.
That's good.
I have a lot of, and actually a lot of people are more interested in tax than I thought they would be.
Really?
But a lot of people have opinions on the tax that's being introduced. So for example, when the budget came out, people, at the end of the day, tax affects everybody. So when the budget came out, people were very nervous for how this would affect them.
Okay.
Kind of on a larger scale, not talking about the individual release, but on a larger scale. So I actually feel like I get a lot of comments about, what we should be doing, and actually a lot of interesting ideas of what people should be doing. I get it from a bunch of people, say that we should have a flat rate of tax, which actually would be quite a good idea. Or just like one or two taxes, not all of these taxes, make it simple.
There is a lot.
People think the HMRC are trying to catch them out when they're not trying to catch them out, but they just feel like the whole system is too complicated.
Yes, yeah. Charlotte, can I ask you the implications of tax when we have a change of government?
Yeah. So I feel like with the change of governments, I feel like they just push the long-term issues down the road.
Yeah.
So, they talk about, for example, the thresholds. So the income tax thresholds at the moment have been frozen for a further 2 years to 2030.
Yeah.
By that point, there'll be another government in place and who knows what will happen.
They can deal with it.
Exactly. It's kind of like they can deal with it. And I do feel like it would be really refreshing if whoever comes in next just actually makes changes for now. And whatever you think about Trump, people have their opinions on him as a person, but he is strong and he makes decisions now.
Yes.
And I do think that is what we need in the UK.
Yeah.
I do think that we need strong decisions. I feel like potentially, we're all, lots of people are struggling at the moment. It is, a really shocking state of affairs, the economy in the UK at the moment.
Yeah.
And I just feel like spending needs to stop. And I actually really believe taxes need to go down. So instead of raising taxes, and increasing spending, which means that you've basically got no net gain.
Yeah.
They need to, again, have no net gain, but reduce the taxes and reduce spending and actually take that back. There would be a gain. Because I think if you reduce taxes, the tax revenues go up. There's this thing called the Laffer curve. I don't know if you've heard about the Laffer curve, but it's basically a graph that literally goes like that. And at this end, there's no tax rate and no tax revenues.
Yeah.
And here, this is 100% tax rate and no tax revenues because everyone would have left the country.
Yes. Yeah.
You need to find that sweet spot at the top, which gives you the right tax rate to have the maximum number of tax revenues.
Yes.
And I feel like that is where someone needs to get to. Like, I just feel like at the moment it's just gone so high. It's kind of gone over on this side of the curve. So the tax revenues are going down. People are leaving.
Yes.
They just need to bring it down to try and get the revenues back in, get companies wanting to invest in the UK. Sorry, people wanting to invest in the UK, companies wanting to have their headquarters in the UK.
Yes.
Because so many companies have just jumped ship and gone to more kind of tax favourable countries.
Yeah.
We need to bring more to the UK, bring the entrepreneurs back,
Yes.
encourage our entrepreneurs
To stay.
exactly.
Those that are here to get them to stay.
Exactly. And just, the UK in the past has been a hub for business and it's just completely gone. And it will come back. We just need someone to take charge and
make it attractive.
Exactly.
From a tax perspective, make it attractive. You mentioned there Trump. Trump's plans with Greenland. What sort of, if that all succeeds, what tax implications do you feel that may hold for the UK?
Very difficult to say.
Yeah.
But if we're talking about Trump, let's just assume that there would be some tariffs in place. As always, it would only ever affect the end consumer. So everything will just be getting more and more expensive. It's already expensive with inflation and everything, and it would only get more and more expensive. It's like what's been going on with the farmers with inheritance tax, because now the farms are coming into inheritance tax, which
Explain that for those that don't understand.
Right, so previously farms were exempt from inheritance tax, which makes sense because they would be passed down from generation to generation. And I don't know if you've seen the Jeremy Clarkson program.
Yeah.
So actually, I think it could have potentially have started with him. He came out years ago and said he's protecting his money by buying a farm.
Yeah.
And that's what a lot of very wealthy people were doing because they knew it was exempt from inheritance tax. He's then come out and made this program, which was amazing. Thought it was incredible.
So funny.
But it does show you that even after, when you got to the end of the series, they just made enough profit, the revenue, to cover their expenses.
And he was open about that. He had it on a whiteboard with, what was the fella's name?
Caleb.
That's it, with Caleb.
Yeah.
And he was very open about the fact that hardly any profit.
So the problem now is that if the farms are coming into inheritance tax, that means that the descendants that inherit the farm will not be able to pay that inheritance tax bill because they're not making any money from the farm. So they will have to sell expensive machinery, potentially even sell the farm to pay the inheritance tax bill.
And you're getting rid of a family legacy.
I know.
If that's been 3, 4, 5 generations, that's so sad.
I know. And it's a lot of these families, it's all they've known.
Yeah.
They've been brought up to be farmers, to take on the family business. And it is just such a shame. And it's only going to drive up prices, food prices.
Yeah. We've talked about, obviously, a lot of our entrepreneurs are leaving to countries that are more favourable for tax. Do you have the top 5 countries where people are routinely going to? Is there a...
I mean, the top place is Dubai.
Dubai, I thought you were going to say Dubai.
With no taxes.
Yeah.
But and there's no barriers to entry at all. I think it's pretty easy to set up there.
Okay.
So that's where they're all flocking. Yeah. And they want investment there. So they're bringing people in. I do think they will start increasing taxes. I think they've brought in corporation tax, like a minuscule corporation tax.
Yes.
And they will start to be introducing income tax. But imagine, people, if you're on £100,000 salary, you take home about £50,000. In Dubai, if you earn £100,000, you take home £100,000.
Yeah. Now, I accept that things are then more expensive in Dubai.
Yeah.
But that's within your control.
Exactly.
You know what I mean? You don't have to live that lavish lifestyle.
Exactly.
You can have more disposable income.
Exactly. And think about it, if you're starting off with your family,
Yes.
you're thinking about how you can support your family. You know, supporting your families here is so difficult.
It
and
really is.
you want to set them up for a good life. And that's why I think a lot of people are leaving. It's very difficult to leave if you're, as in for work reasons. So for example, if you're in a job here, it's very difficult to leave that stable job to move. But if you run your own business, it's very, you're much more
easy.
mobile and you can move, and you'll move most likely for the sake of your children as well.
Yeah.
Thinking about their future.
So people are literally going with no intention of coming back. That's what you're seeing.
Yes.
Yeah.
Oh yeah, definitely.
Makes sense.
Yeah.
Charlotte, thank you so much.
Thank you for having me.